all these rules ultimately are created so that the reader knows what they're looking at. Now, you could then draw your own conclusions as to whether it's good or bad. Do I invest in it or do I not? Do I loan money to it or not? Do I participate in it or not? Do I go work there or not? You know, but ultimately what we want is to provide a clear, it doesn't matter if it's good, bad, or ugly. I always tell people, if you start fudging on your financial statements in a small, closely held business, the only person you're lying to is to yourself. Because if things are bad, the only way to address them is to face them head on. Right? So, you know, a lot of times, you know, I've worked in small businesses where the owners don't want to know, oh, well, let's, can you do something, you know? You always feel the pressure when you're the CFO in a small business, you know, to make things look better than, you know, because the bank and we got our covenants and like, dude, who are you kidding? I mean, who are you kidding? And I tell you, in my personal, I think, look, I'm mea culpa, mea maxima culpa, okay? I mean, I'm no saint. I've done things in youth that maybe I wouldn't do again, okay? Never for personal enrichment. But I've pushed the envelope on financial stuff in the past. And I can tell you, without a doubt, anytime that I think back of where did I push the envelope? Dude, I was always going back and trying to rely on the form of something and not the substance. And trying to convince somebody of something that was going to lead them to a different conclusion than what the reality was. Okay? And so, I just go back to, in your personal lives, sometimes the truth hurts. But if you deal with it, then you can improve. And you can, you know, and you can go beyond. You know, you go beyond it, okay? I'm going to give you 15 or 20 more minutes of accounting, okay? And then I'm going to stop talking about accounting, like nuts and bolts accounting, for the rest of the term, okay? So just a little bit of so, I mean, was this stuff like as clear as mud or whatever? I mean, I don't know. Was this, you know, I don't know. It seems to make sense to me, but maybe I'm crazy or something. I don't know. So, yeah. So,
it makes sense at a high level, but I'm not quite sure
that you gather it yet.
digging into each one of those really going to make any difference, because at the end of the day, I mean, understanding the concept around it and how the rules are put in place and the discrimination of each one of those, it's important, but ultimately it's really going to be for the government to actually.
Well, you know, yes and no. Yes and no. It depends on your role in an organization. And listen, the one thing that I'm going to go back to my audit days, okay? A lot of times, you know, you come in, so what's an audit, right? And then we'll talk about what the role of an auditor is later on. There's a huge expectation gap. You know, auditors are there to detect fraud. Wrong.
An excuse not to show your tax. Oh.
An excuse to what?
Not to show your tax.
No, it has nothing to. An auditor. No.
Let me ask you this. Are you going to help me save a lot of money in taxes if I go through all this stuff?
Yes.
This is not a tax class.
Yeah, no, because if you learn
If you know,
and you can defend your position, you can.
But ultimately, so one of the things, so an auditor would come in. So we come in to issue an opinion on a company's financial statements. Management owns the financial statements, and management prepares and presents and represents the financial statements. The auditor does not. But going back to so we come in, we'd say, hey, look, this transaction is not recorded according to, you know, this isn't GAAP. We've got to make an adjustment. Well, how can that be? It's gonna, you know, I need to recognize this revenue this year. You should have reached out to your accountant before you structured it that way. A lot of times, going back to the point, how we structure things is going to help us potentially show different results, or the timing of results at different, which may have more favorable or less favorable tax implications as well. And so, why you need to know these things is only because in the future, if you don't have the awareness, you're not going to pull in the people that you need to. And the more intimate knowledge you have, yeah, I don't purport, and you will not walk out of this class with the knowledge to be a CFO, okay? But hopefully you've got enough knowledge to say, hey, I know what that means in those financial statements. I didn't know what that meant, you know, for example, okay? Accounting is very simple. Accounting is very simple. So in addition to debits equal credits, accounting is predicated on a very simple algebraic formula. It says assets are equal to liabilities plus owner's equity. That's it. So by definition, whenever you do a debit and a credit, right, you are debiting or you are creating or subtracting from assets or adding to or increasing liabilities or equity. If you want to, you know, I've used my Samuel balance sheet, right, in a very simple context. If you want to think of a house that's worth $100,000, I own a house that's worth $100,000, those are my assets, right? I owe a mortgage of $80 or $80,000, right? So by definition, what is my underlying equity in that house? What's my underlying residual interest in that house after creditors or service? 20. I mean, it's really that simple. This is a balance sheet. I just did the most basic of the financial statements. This is a balance sheet. Now, a balance sheet, so there's really 4 or 5, I'm going to say 5 basic components to a proper GAAP set of financial statements, okay? A balance sheet is the first one, and a balance sheet basically has assets, liabilities, and equity. Equity has a couple of components because equity may be the initial contribution that you made into a business, but it is also the cumulative effect of all of the activity that you've had in a business. Okay, so looked at in a kind of a interesting way, or way I've heard people say, this is kind of like a picture. Okay, because a balance sheet is done as of a particular date. As of a particular date. Okay, so as of December 31, X1. Now, if I just said this equity is really kind of comprised of a couple of different things, you know, initial contributions and then the summation of all the cumulative results over time, then an income statement is not like a picture. An income statement is more like a movie. Okay? And an income statement shows all of your revenue less all of your expenses, and I'm doing this in a very simplified fashion, okay? To get to your net income, okay? For the year or for the period ended, X. You know, typically we'll talk about business, you know, calendars in a bit as it relates to real estate in another session. But typically we look at a calendar year as a normal business cycle. In real estate it doesn't work, and that's why it's one of the reasons we've got nuances. But so an income statement is like a movie for a particular period. Okay, so a balance sheet gives you the financial condition or position of a business at a particular point in time. An income statement gives you an idea of the results of its operations. In fact, and a lot of people call an income statement a statement of operations. Some people will call it a P&L, a statement of profits and losses, or a statement of profit and loss, or a profit and loss statement. But some people call it a statement of operation. So an income statement is a movie. It's like a movie that shows your results, the results of all of your sales and all of your expenses during a particular period of time. Okay? Now, a set of financial statements is going to have 3 or 4 integral components to it, okay? A GAAP set of financial statements definitely has a balance sheet. It definitely has an income statement. We'll look at those in this class. As a statement of cash flows. We will not cover that in this class. Okay? A statement of cash flows is, in my way, is an accountant's attempt to become finance professionals, okay? And it really tries to explain movements in your balance sheet based upon operations and changes in your balance. We're not gonna cover this, okay? Nobody looks at this stuff. And footnotes. In every one of our balance sheets, income statements, and statements of cash flows, we always put at the bottom, there was always a footnote there that said, the footnotes to these financial statements are an integral component of these statements. Footnotes, as you will find as you do some of the case studies, footnotes are as an important a component to financial statements as are the actual statements themselves. Because there's a series of disclosures that are found in the footnotes that cannot be found on the face of these statements. Okay? Now, when we take a look at the 10K for the home builder, you're actually going to look at a set of financial statements and you'll see how this all comes together, okay, and what this means. Now, there's got to be some sort of cover, introduction, opinion. There's always something at the beginning that explains what the document is. Just like, to go further, and by the way, get into the habits as you submit Excel spreadsheets to me or you do them in your work, that all your spreadsheets and all of your documents should have headings. And a proper heading for a financial statement always has the name of the company, the statement, and the period that's covered. This is critical. You need to know this. You need to know this, and you should get into the habit of doing this in your lives. Because when somebody picks up a piece of paper, they need to know what company is it, what statement is it, and what period does it cover. So if it's a balance sheet, it's as of a particular date. If it's an income statement, it's for a particular period. But it's telling the reader, you got to tell the reader on the face of that document what they're looking at. Otherwise, they don't know. Well, we're on this. Yes, Chanel, I'm going to get to your question. Before I forget, syntax on the naming of your files with 19 students in this class. Last name, dot, file name, okay? Okay, and then it could be .xlsx or whatever, okay? Give me your name and give me what it is. First project, okay, I got 19 first projects. Whose is it? Okay, Chanel, yes.
What is above the balance sheet?
Above the balance sheet with the name of the company,
To the left.
balance sheet, it would be a cover page, or if they're audited statements, it would be an opinion. If they're just management statements, if you're sending statements to a lender, if you're sending statements to a partner, you're going to have some explanation up front. These are the statements. You may have some commentary on them. You may have some affirmations. A bank may ask you to affirm certain things. They may have covenants there. You may have to calculate them and affirm them. But there is always something, just like the beginning of the top of every document introduces the document, there has to be some sort of cover that introduces all of the other documents that are attached to that, okay? And maybe just the name of the company, financial statements, and the period that's covered, okay? But you can't just send something out like that, okay? We're very sort of anal that way, if you want to say that, okay?
What were you saying? You were saying 19 and you were saying 19, you got 19 of...
We have 19 students.
Oh.
I just said, if you don't put your names on your files,
Yeah, you don't...
then when I save them, right, so what happens is most of the time, I wind up having to write no name Olivia, whatever, or, no name Rosie, whatever. I don't know, I think you did put your name on yours. And I'm just using you as an example. I'm just using you as an example, okay? It's just, accounting case study. I get 19 accounting case studies, and I go back to review them, and so, okay? I'm going to give you a whole Excel etiquette session. Whether you follow it or not is up to you, okay? Like, my pet peeve, I open up this happens, somebody sends you an Excel spreadsheet. Where do they leave the cursor? On the third tab, line 80, column F.
You say you saved it with that tab.
Oh.
Yeah, so like,
Control home.
well, but my question is, what do you want the reader to look at?
First, right?
Right? I mean, leave the spreadsheet where you want the reader to start reading. I mean, it's just simple courtesy. And listen, I'm gonna give you some nice little, you're gonna love it.
I learned that one the hard way. My first job at Parmenter.
Somebody, you work at Parmenter?
Yeah.
Okay.
Wait, you know them?
Yeah.
Andy, you know them?
Well, I don't personally know
Well,
them.
but
I-
you know,
Yes,
so they're
I-
tough. So imagine.
They're very tough, yes. Yes, so, anyway, so this is what the basic financial statements look like. Now, what I don't really have the time to get into is how we accumulate them. Okay? Because, unfortunately, we don't have a lot of time today, but I'll give you 2 seconds on it. I'm old enough to, I worked at my dad's accounting firm when there were no computers. In fact, I remember installing my dad's first TRS-80 from Radio Shack. Okay, so I did accounting on books with paper, okay? And
Saw those
so,
in a museum once.
and so I know how to, I know how to do it. And now you go to QuickBooks, but you just put stuff, QuickBooks is like the worst program there is. It's garbage. I just installed it for a friend the other day. It's garbage. It's not accounting.
What did you install it?
It's what?
What did you install?
What? Because he bought it. So he's like, hey, can you help me download? Okay, so I downloaded it. The problem is, because I'm the treasurer of his stupid club, I'm the one who's going to have to use it. But, because frankly, I got tired of him giving me junk, and I was doing all this stuff in Excel. And I was like, let's buy something anyway. So historically, you had something just called the general journal, okay? And you would do all of your debits and credits. And so that you know, the credits are always by the door and the debits are always by the window. Well, it depends, because if the windows are over there, no. So anyway, but the debits are always on the left, the credits are always on the right, okay? We know debits are always on the left, and they're not, it's not like debits are good and credits are bad or the other way around. They're neither good nor bad. No, they're not. The problem is, people think credits are good because in a bank's balance sheet is the inverse of most people. And so, because your deposit at a bank is one of their liabilities, to increase a liability, you credit it. So, when they're crediting their liability, it's like you're getting money in your account, so you go, oh, that's good. Well, it's neither good nor bad, it just is, it just is. Okay, so anyway, so we had a general journal. You would post all these individual journal entries, and then you would have all these summary sheets, which we, in accounting we could summarize as T accounts. And so we would have an account for every one of the sort of general or trial balance accounts, we would have a T account. And so we would post all of these journal entries into all of these T accounts, okay? For each one of the concepts that we had on the balance sheet and on the income statement, okay? We do the income statement, so that's how it would be done. Somebody got creative enough to say, hey, we've got certain things that are repetitive, and so we created a purchases journal, we created a sales journal, we created a cash receipts journal, and we created a cash disbursements journal. And so instead of doing one entry at a time, we would post into these journals, and then all this would feed here in summary form at the end of the month. Okay? Now, you add up all these things every month, and this transfers into something called a trial balance. And by default,
What's the last one? Sorry, just curious. The E?
last one where?
The box,
Accounts
the box,
receivable.
The box.
Cash disbursement.
Cash disbursements. So I never quite got doing these, we were doing these when I worked, okay? I'm not that ancient, okay? So in this trial balance, you then list all of the accounts that you have, okay? Sales, expenses, etc. Okay? So your trial balance then is a summary of all of your account totals from these T accounts at the end of a month. And by definition, your trial balance has to balance, because all your debits have to equal all your credits, okay? And then from this trial balance, we can create our income statement. The net of that income statement is transferred to retained earnings, right, to your equity account, and now we can create our balance sheet, okay? And I'm not gonna get into the mechanics, this is all done electronically now anyway, okay? But the concept is, we have individual transactions, right? Transactions give rise to journal entries. Every transaction that happens in a business needs to be recorded. We record it by way of a journal entry. Now, more like, sort of more advanced, we've got these separate journal books, but now these books don't exist. You just input stuff into QuickBooks or, Dynamics or, whatever, Oracle Financials or whatever accounting software you have, Yardi if you're in a, management business, so whatever accounting software you're using, you're just inputting transactions, and in the background, it's creating T accounts, it's netting them out, and then you just hit out reports, boom, trial balance. Okay, it looks good. Kick out income statement, boom, kicks it out. Kick out balance sheet, it kicks it out. Okay? So, and obviously a balance sheet balances, right? Because the total of assets have to equal the total of liabilities plus equity. Because that's where we started. Assets equal liabilities plus equity. Okay? Financial statements are used internally, they're used externally. Okay, so they are for the use of the owners and the managers of a business, and they are for the use of vested parties. It could be lenders, it could be regulatory authorities. Okay, it could be peers. Sometimes, industries share information. You have to be careful when you share information because there may be, anti-competition rules, right? So, unfortunately, you can't share, say, like pricing information and collude on pricing. But it's very common, for instance, for credit managers of different businesses in a particular sector to come together and share information on their customers. So that if there's a deadbeat out there and he burns one guy, he doesn't burn everybody else, as an example of information that could be shared. We'll talk about internal controls another day. We'll talk about taxation another day. But just understand that what we're going to talk about in this class deals with this body of knowledge that encompasses GAAP. Taxation is something else over here that's governed by the U.S. Code, okay? And in particular, it was codified in 1939 as the original Internal Revenue Code, and then modified in 54, and then modified in 86, and continually updated with rules and legislation and all that. But taxation is not accounting. Taxation is sort of like an accumulation of information that you could typically summarize. What's the old joke? How much did you make? Okay, remitted to the Internal Revenue Service. It's a set of rules that have you accumulate certain income items and certain expense items so as to derive a calculation of what the government feels you owe it. But it has nothing to do with a cohesive or comprehensive body of financial information or the financial history of a company's operations. By default, we'll be doing some managerial accounting here. The body of managerial accounting is what some people refer to cost accounting. So we are custom manufacturers in real estate, but there's also process manufacturing, right? You could make widgets. You're making a bunch of widgets. But in real estate, we're custom manufacturing because everything we do is unique. And so we really should rely on more managerial accounting type tools and concepts, okay? In this particular class, we will deal much more with historical based financial reporting than prospective financial reporting. Prospective financial reporting is what you're dealing with in all of your other classes, budgeting and forecast. So in this class, we teach you about accumulating history. So having a good historical base, you can build good information for the future. Okay, so how do you build a budget of operating expenses for next year if you don't know what your operating expenses were the year behind you? So hopefully the accumulation of data helps us build good prospective financial information and forecasted information. Okay? So that's kind of the base information that I wanted to cover today. That's it. I mean, are you guys tired or anything? We're gonna take a breath. I needed to remind you, somebody sent me something from one of these offices here. One of the many people that work here at Nova sent me a thing that said, I gotta read it because I forget exactly how it goes. It made no sense to me, but it's like some sort of like presidential edict or Department of Education edict or whatever. There's a Department of Education requirement that says, basically it says that if a student tells their instructor that they wish to drop a class, I must advise them to have a conversation with their program manager and with their advisor and all that. And I don't know why I have to tell you that, other than I have to tell you that if you think you want to drop this class and you're going to tell me that, I'm telling you now, go speak with your advisor before you do that. And I don't know why, my guess is here that somebody must have flunked and they got an F and they probably went to somebody and said, oh, but I told my instructor I was going to drop. But I don't drop people. You have to drop the class. And there's time windows to do that. So I'm just complying with Department of Education guidelines. So some Secretary DeVos or whoever doesn't come and beat me up or whatever. So if you think you want to drop the class, that's fine. You can tell me, and I'm happy to give you my opinion. Sometimes I tell people that may be a prudent thing to do. Okay? Sometimes I might tell people, listen, gut it out. Don't give up. Just hunker down. Listen, we'll get you there. Or, listen, you shouldn't be asking for extra credit work in a graduate class, but maybe in this class, this is a class that in the past I have given people extra credit work, which I think is valuable, but I may or may not. So, but anyway, so I've told you that. Now, with that, take a deep breath, look at your notes, take a sheet of paper, clear your desks, clear your desks. Boise, do you mind giving Michael a sheet of paper?
No.
Your wallet's on the floor and you didn't take anything from it.
Yeah. If it was a 10, I might have been.
And listen.
You see my foot?
Hey, and before you guys start complaining, this quiz is really hard. Listen, remember, this is only a small portion of your grade, okay? And this may be the hardest quiz that you have, because after this, you're going to have it on a video. You're going to have your notes in front of you, because I can't tell you not to look at your notes while you're doing a quiz online, So this just might be, you might just not do great on this one, but listen, I've had people get hundreds on this. I mean, people get hundreds. There's half an eaten sandwich here.
Yeah, it's mine.
Whose?
Mine.
Oh, are you going to leave it there, or are you going to eat it?
No, I just didn't want to.
Oh, okay. I don't mind if you eat
I
well.
don't want to be tempted.
It's interesting, computers bother me, but food doesn't.
That's
I don't know.
interesting. Yes, it is interesting.
Really?
All the noise from the cellophane wrapper goes about you off us.
You ragging on me? Remember I have to grade your quiz too. And, I could be like really lenient, like, oh, that sounds like she kind of got it. Or she busted on me.
I'm just participating.
Okay, I like that. That's better. You guys tell me when you're ready.
We're ready.
You guys are ready?
Yep.
Okay, so, but before we start the quiz, just to remind everyone, likely this week on Saturday, I will send you a link. I'll send you an email with, I'm going to send you an email already with some reading material. Okay, so So tomorrow, Monday, you're gonna get some reading material. It's the new pronouncement on leases that was issued last year. And you know, there's always a sort of a period of adaptation. So over the next couple of years, all companies need to comply. Okay, so I'll send you that so you can read it, so it makes the lecture that you'll get relevant. But I'll send you a link and you'll have 3 or 4 videos to watch. So what I've tried to do is break these things down into like roughly hour increments, so that you could go, okay, I can't take this guy 4 hours, you know. Just do it little doses at a time, okay? Like little children's aspirin, little doses at a time, and then Monday, I'll send you a reminder. I don't need to send you. I'll send you a reminder letting you know that you've got doctor. Doctor, I'm doing. I'll send you a reminder that your exam or your quiz will be on Blackboard. Okay? Any questions on that? No questions. And then you will not have a case study due next week, but for the following week, so that you know, you will get a case study next Saturday in conjunction with the links to the videos. You will get a case study. It will be the home builder case study. So it'll tell you what to do. You'll have a segment that kind of walks you through a 10K, so you're not walking into this blindly. But it will be due when?
Thursday.
Thursday, by what time?
By 3.
Gayon, by what time? Okay, 3 o'clock. All right, excellent. So, should I spray this so that you guys can't cheat on the answers? Or do you want me to like kind of leave it semi-erased so that... Okay, all right, question number 1. Question number 1. Put your names on the top, please, because you would be surprised. There are people who turn in quizzes without their names. Question number 1. Okay, I want to make this easy for you guys. I'm only going to give you, do you guys want 5 or 10 questions? You want 5 or 10?
Quantity or quality?
Well, the problem is 5, each one's worth 20.
So if it's easy, do 5.
We can just take the 5 best questions of the 10. And only grade those.
Let's go down the list. Okay, let's go down the list. Please detail three out of the 5 components of a financial statement that we just went over. 3. You don't have to give me all 5. Just give me 3 out of the 5. Okay, question number 2, and we'll come back, I'll give you more time. Question number 2, please give me the heading of what an income statement should have on top of it. Please detail what the heading of an income statement should look like. Okay, question number 3. Question number 3. Please detail what the abbreviations GAAP, GAAP, and NAREE stand for. GAAP, NAREE, N-A-R-E-I-T. Dude, if you guys can't get 100 on this. Question number 4. Question number 4. Question number 4. Please detail what the abbreviations PP&E and SPV stand for.
PP is good.
PP&E and SPV. V. V is in Victor.
Okay.
V de vaca, no de burro. Okay, question number 5. Question number 5. In a REIT structure, what is a proxy that is used for NOI? What is the proxy? What is the term that we use instead of NOI? And how is it calculated? A proxy for NOI. I'll go back at the end and repeat the questions, okay, if you guys have any. Okay, question number 6. Question number 6. Involuntary conversions, or what we called eminent domain earlier, involuntary conversions are covered by what section of the Internal Revenue Code? Right here.
I remember.
I can visualize it.
I remember, yeah, I know. Come on.
It's right here. It's very similar to the other number I gave you. Okay, question number 7. Question number 7. Please name a legal structure under which a real estate development can be created or is typically created. We mentioned several structures, legal entities.
You mean the number?
Abbreviations are okay.
You mean the number? You want to talk?
A type of legal structure. I mentioned several of them earlier. We talked about tax advantage structures. Can't give you any more than that.
Can you name a legal structure under any?
Under which a real estate development is usually created. I'll give you 3 easy ones after this. Question number 8. What is a lease? In the context of this class, what is a lease? Question number 9. Question number 9. In the context of this class, what is real estate? In the context of this class, what is real estate? And question number 10. And question number 10. On which side do debits go? Come on, this is like 100. Like I'm gonna have like 1500s here.
I almost dropped out of my financial accounting class because I couldn't figure it out. It took me 2 weeks to figure it out.
But you know now.
Well, yeah, because I just came up with the
a formula in your.
Like, stop trying to rationalize it and just say,
It's,
it is what it is.
It is what it is. Okay, if you have any questions, you can ask me, and if you're done, you can bring it up. Make sure your name's on it. Yes?
Can you repeat 4 again one more time?
Question number 4 is, please define the following abbreviations, PP&E and SPV. Yes, sir. Question number 5, in a REIT structure, what is the proxy for net income? And please detail how this value is derived.
One more, this, 3.
Question number 3, please define the following abbreviations, GAAP, GAAP, and NAREIT, NAREIT.
Number 1 at the end, please.
Number 1,
3 or 5 of the company.
please detail 3 of the 5 basic components of a financial statement that we just went over today.
I remember the visual, but I can't remember that.
Okay.
See, we started, but then I lost.
You lost focus.
Yeah.
Okay. Excellent. Harold? Proceed. Excellent. Wait, let's stay talking.
Sorry, what was number 7 again? The question?
Olivia, number 7 is please name a typical legal structure under which a real estate development is usually created.